Hello everyone, welcome to today's video. Today we are going to discuss the topic called guarantee of profits. That too, we are going to discuss a rare situation that happens in that particular guarantee of profit cases. So without further delay, let us jump into the question along with which we will discuss the topic in detail. So as you can see on the screen, there is a question where they say like A, B and C are partners having capitals of 10 lakhs, 8 lakhs and 6 lakhs respectively in a firm, sharing profits and losses equally. So we know that their profit sharing ratio is equally again. So basically 1:1. C is guaranteed a minimum profit of 1 lakh as the share of profit every year. The minimum C will get 1 lakh per year. Now we will discuss what is guarantee of profit. Basically you know that guarantee of profit basically means some people or one or two of the partners may give some promise to the other partner that his profit will not go below a particular amount. That promise which is given is called guarantee. Okay, so here the promise given to C is actually 1 lakh. It's not mentioned as who gave the promise. So basically if nothing is mentioned in the question regarding who gave the promise, it is A and B together. That means the other partners together. One important thing to note again. Next is the firm incurred a loss of 3 lakhs for the year ended 31st March. As you can see here, firm incurred a loss of 3 lakh for the year ended 31st March 2020. This is a situation where we are giving some partners a guarantee that his profit will not go below a particular amount, but in that situation, in that particular year, the entire business or the firm is suffering a loss. So what will we do in that particular kind of situation? That is what we are going to discuss. That is why I selected this question. Usually this kind of questions only used to come for boards. Recent trends show that only. So basically, okay, so when it comes to that, you are required to show the necessary entries for giving effect to the minimum guaranteed profit to C. So they are asking to pass only the journal entry or entries which are required to what? Show how this guarantee of profit will be met. When you use the word met means what? How this guarantee will be given by the other partners, or how the guarantee will be met by the other partners. We can use the word met for that purpose. So when it comes to this, met means how they will pay, how they are going to, A and B are going to manage this kind of situation. That is the meaning of met. Okay, now for this purpose, first of all, I would like you to understand two categories of people that comes into role when it comes to guarantee of profits. First category of people is called guaranteeing partners. Guaranteeing partners. Second is called guaranteed partners. Guaranteed partner. So basically first category are those people who are giving the guarantee. So you can say here according to the question, A and B are giving the guarantee and the one who is getting the guarantee is called guaranteed partner, that is C. Without any doubt you can understand it clearly because the question is very specific to that. Okay, who is getting the guarantee. Now when it comes to this, in any situation, so what do you mean by guarantee? Is it the maximum profit or is it the minimum profit? Obviously it is the minimum profit. It doesn't mean that partner may not get, the guaranteed partner may not get more than that. Keep always that in mind. This is the minimum profit. So it is like this. When we divide a profit of a particular year, for example, here take the example of three partners again. Profit is, so for 1 year their profit is suppose 3 lakhs. A and B and C are sharing profits equally. So A will get how much? 1 lakh. B also will get 1 lakh and C also will get 1 lakh. That is how we are sharing profit, right? Okay, C also is going to get 1 lakh. So in this kind of situation, suppose C was promised that C will get 80,000 minimum profit in an year. Now when we divided the profit, normally how much C is getting? 3 lakh already. So does it mean that only C should get 80,000? No, it can go above that also. It depends on the profit that we are actually sharing. So when we actually share the profit, suppose instead of this 1 lakh, if 70,000 comes, then that time that deficient amount, what is the deficient amount? 10,000 rupees should be paid by the other partners. Usually it is both the other partners together. Okay, sometimes A alone also can give the promise, that is also there. Okay, in that case A alone should pay this 10,000. If the situation is like this, that means we have promised him 80,000 rupees and his actual profit came around only 70,000 rupees. When we divided the profit, he is getting only 70,000. He means the third person is getting only 70,000. By default, as I said, both the other partners have to contribute, okay, to this one, cover this 10,000. So how will they contribute? There is a ratio for that. You can just call the ratio as ratio of deficiency or ratio used to cover deficiency. What do you mean by deficiency? The amount that is required to reach the minimum profit, that amount is called deficiency. So how much is deficiency? Basically it is the difference between the guaranteed profit and the actual profit that we are giving now. So if guaranteed profit is more and the actual profit given is less, then that difference is called deficiency. So here deficiency is there. I told you about one ratio. That ratio is actually, sometimes in the question they will say, in the case of any deficiency you have to divide that deficiency in this ratio, or A and B should take care of that deficiency in this ratio. Particularly it will be mentioned there. In that case you can follow that ratio. Here as you can see in the question, they have not specified any ratio like that. Here they just said you are required to pass the necessary journal entries for giving the minimum effective minimum guaranteed profit to C. So there can be question like this also. In that case what you are supposed to do is, you just think about their actual profit sharing ratio and remove the guaranteed partners share. Remove the guaranteed partners share. So basically guaranteed partner is C. So if you remove it, what is remaining? 1:1. So this is the ratio in which they have to share the deficiency. Suppose this is the answer. I mean this example which we are discussing, this is the answer. In this, in 1:1 ratio, they have to share this 10,000. 10,000 will be divided as A will give 5,000 and B also should give 5,000. From where they will give? From the profit that they are getting only they will be giving it. But while passing entry, we don't have to think like that. We will just pass an entry in this manner which follows. I will show you the entry. The entry will be like this: guaranteeing partners capital account debit to guaranteeing partners capital account. It can be current account also. You know when current account comes, right? We are already expert in that. There are two methods to maintain capital account, right? One is fixed capital method and second one is fluctuating capital method. So if you are following fixed capital method, current account can come in the entries. So here basically in this question also it doesn't specify any method. So if nothing is mentioned in the question, they are following fixed capital method only. So we are only passing guaranteed partners capital account debit to guaranteed partners capital account. Guaranteed partners capital account. What are we doing here? We are taking some money from guaranteeing partners capital account and giving it to guaranteed partners capital account. That is why guaranteeing partners capital account is debited, because we are reducing money from their capital account and we are giving it to guaranteed partners capital account. As you know, capital account, if it is debited, the amount will decrease in that account. Capital account, if it is credited, the amount will increase in that account. So without further delay, let us jump into the main solution of this question. This is just the outline of what we are going to do here. So what is the entry that you are going to pass? So here also in this question, without any doubt, you can say the entry anyways. Now who has given the guarantee? Suppose if we are supposed to pass this entry, how will be the entry passed? A's capital account debit, B's capital account debit to C's capital account. If there is such a situation that we need to pass this entry, always we don't have to pass this entry, right? We have to check whether the minimum guaranteed profit is he is getting or not. So for that we need to know the actual profit he is getting. For that, when it comes to this question, instead of getting profit, the firm is suffering loss. As you can see here, the firm is suffering a loss. So it can also happen like this, right? Everything will not go as per our expectations. So sometimes firm can suffer loss also. We have given a promise that one person's profit will not be less than some amount, and in the same year we may suffer a loss also. We means the entire business may suffer a loss. In the situation, what to do? There is a condition for this. That condition is like this: In this kind of situations where we have promised someone minimum amount of profit, and in that particular year the firm is suffering a loss, in that year what you are supposed to do is you have to, that means A and B has to give the minimum amount of profit, I mean minimum amount of profit promised. Promised means obviously guaranteed, and also they have to cover the that person's, that means the guaranteed partner's share of loss. Guaranteed partner's share of loss. What does it mean? Minimum amount of profit that we guaranteed is how much? 1 lakh plus the guaranteed partner's share of loss. Who is the guaranteed partner here? Obviously C. So C's share of loss. Here we know that they are all sharing profits and losses equally. So what will be C's share of loss? 3 lakh. When we divide it in 1:1:1, how much you will get? Obviously C is getting 1 lakh loss, B is also getting 1 lakh loss, A is also getting 1 lakh loss. In these kind of situations we have to do like this, that means C's share of loss is 1 lakh and guaranteed profit is 1 lakh. So together we have to pay. B means who has to pay? A and B has to pay. In which ratio they will pay this? That means totally 2 lakh they have to pay. So in which ratio they will be paying it? Obviously if no other ratio is given means just remove the guaranteed partner share. What is remaining? 1:1 ratio. So basically 1:1 ratio, that means 2 lakh will be divided in 1:1 ratio. So obviously 2 lakhs 1/2 is given by A and 2 lakhs 1/2 will be given by B. So together 2 lakh will be given to obviously C. So what will be the entry? Let us pass the entry now. Obviously A's capital account debit, B's capital account debit to C's capital account. What will be the amounts? As we discussed just now, 2 lakh was the total amount that A and B has to pay. So they will divide it in 1:2. 1:1 ratio. So 1/2 will be given by A and same 1/2 will be given by B. So A will give 1 lakh, B also will give 1 lakh and C will get 2 lakhs. Okay, what will be the narration? Narration is deficiency met by A and B in the ratio of 1:1. In the ratio of 1:1. Why we are calling it a deficiency? 1 lakh they are supposed to pay, that they cannot pay. Entire 1 lakh is deficiency only, right? Because this year they are suffering loss only. So what do you call as deficiency? The difference between the actual profit that person is getting minus the guaranteed profit, right? The difference between these two. Here actual profit he is not getting, so actually he is getting negative 1 lakh. We promised positive 1 lakh to him, but he is getting negative 1 lakh. So that negative 1 lakh is also deficiency, plus the profit that we promised, that is also deficiency. So totally how much deficiency? Total 2 lakh deficiency. Okay, forget about the negative. The negative 1 lakh denotes loss. So loss of 1 lakh plus profit of 1 lakh. So together he has to get, or he has to be provided with 2 lakh rupees. Just understand like that. Hope this discussion was helpful to you. This is one of the important topics for your upcoming board exams. So hope this discussion will help you to score better in that boards. Thank you.